All right, ladies and gentlemen, in this video, we're going to take a look at support and resistance, discuss support and resistance, and a few points to look out for when you're trading support and resistance. Now, there are different forms of support and resistance. We've got the horizontal support and resistance, we've got the diagonal support and resistance. We also have supply and demand, which is another form of support and resistance. Now, the one we're going to discuss here is just your simple, basic horizontal support and resistance. Right. Now, let's get to it. Now, what is support and resistance? Effectively, price prints zones that act as barrier in the market, right? So as the market prints these prices, there are certain price levels or zones that the market cannot breach. And therefore, that zone, that price is acting as a barrier. And now these barriers, these zones will always be above and or below the market, right? Now, these zones are your simple support and resistance. So a resistance is a zone and will always be a zone that is above the market. Support will always be a zone that is below the market. So what happens is when the market prints these zones, we can then tell what's going to happen in future, because now looking at previously how the market reacted, we can then have confidence to say, okay, this is the zone that you're going to get reaction from the market, whether it's a break, whether it's a bounce, still reaction, right? So now resistance, we see resistance when the market has bounced and then it bounces again, right? So a significant bounce previously will then make or create a resistance. The same as the support, a significant bounce or significant bounces before will then create a support. So resistance will act as the ceiling and support will act as a floor. So when every time the market gets to a resistance, we're anticipating a bounce. It will only depend on how price reacted previously, which we're going to touch on. And every time the market gets to a support, we're anticipating a bounce to the upside. So effectively, resistance, that's where now sellers look to gain control over the buyers. And support, this is where buyers look to gain control over the sellers, right? Now, the other behavior of support and resistance is that every time the market breaks a level of resistance, it does not mean that level will no longer work in future. No, the level will work in future, will definitely work in future. Just that when the market breaks a level of resistance, in future, it will become support because now the market will be above that zone. And anything that is below the market is a potential support. Anything that is above the market is a potential resistance. So when the market pushes to the upside and breaks a level of resistance, that zone will change its role or will swap its role, and then it will become a support. So in future, we're anticipating price to react from that area, but as a support. And then the same thing, when the market breaks an area of support to the downside, since that area will now be to the upside or will now be above the market, it will then become a resistance. So a previous support comes or becomes a future resistance, right? So effectively, this is what support and resistance is, and this is how the market reacts to support and resistance and different behaviors. Now, how do you spot support and resistance? Very important. How do you draw support and resistance? Now, support and resistance, it's not always about how many times the market must bounce from the zone. No, it's not always how many times the market. In fact, we don't look at it that way, that the market has to bounce 3 times for it to become a support or resistance or whatever the case is. No, we are basically looking for the reaction from the zone. The reaction will create a resistance or support. And now this will take us to the next slide. So when the market gets to a support or resistance, we're looking for two things. We're looking for what happened in the previous attempt or in the previous reaction, right? So let's say the market is coming down, 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 and then it bounces once. It pushes to the upside. Now, when the market comes back to the zone again, we're going to take a look at this bounce. We're going to take a look at this reaction, and then we want to analyze and understand what happened previously so that we understand what will happen in future. And then from that bounce, we're looking for two things. We are looking for a strong bounce or a weak bounce. A stronger bounce, it will mean a long opportunity on the next test. So if this reaction, if this bounce was strong, and what do we mean by strong? If this bounce creates a higher high, that means it's a strong bounce. Therefore, we are looking for opportunity whenever the market comes back to the zone. And this is where we're going to get the buy opportunity, right? That is the first thing. So when you see the market aggressively bouncing and creating a higher high, this becomes a level of support, right? And the next time the market comes to it, because of how aggressive the bounce was or how strong the bounce was, the next time the market comes to it, then we're going to look for a buy, simply because these buyers that bought previously, they were very strong that they took like 50% of the sellers. So trust that the next time the market comes back to it, we're going to get more buyers, and then you want to be part of the or one of the buyers, right? That is the first one. That is how a strong bounce look like. Now, let's say the market then bounced, went up and came back down, right? So we see the bounce, the market went up, it came back down, right? What are you going to do? You're going to repeat the same thing. We are going to take a look at this area. So every time the market gets to a support, you shouldn't go all the way back to 19.0 what. No, you're just going to go back to the previous bounce, right? And then now as the market is coming back, we're going to take a look at the previous bounce. Now the previous bounce, let's understand what happened. The market went up and then it failed to break this top. The market failed to break. It did go up according to this previous bounce. It did go up, but now it failed to break this top. What does this tell you? It tells you these buyers, they were there, but they never had enough momentum to change the market and push the market all the way to the upside. So if the market is here at the time, and then previously we saw that the market failed to make a higher high, this is a lower high, then this is a weak bounce. It's a weak bounce. And a weak bounce simply indicates a possible break on the next attempt. So the next time the market comes back here, right, we're anticipating a break to the downside because now the market is bouncing but busy making lower highs, right? So if the market bounces from the support but ends up making lower highs, this tells you that these buyers, people that are trying to buy, have no momentum, have no strength. And effectively, most of the time, the market tends to break to the downside, right? So that's how we identify support and resistance. Now, looking at the resistance, the same thing. Let's say the market is here, right? You open your chart, the market is here. What are you going to do? You're going to look at the previous bounce. If the previous bounce went all the way down to create lower lows, that is a strong bounce. That means we're going to look for selling opportunity here. And then the next time the market comes back to it, because of this market made a lower low, right? You are going to look for a sell. But if the market goes down, 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 fails to make a lower low, it makes a higher low. And then it goes back to the zone again. What does it mean? It means people that try to sell have no momentum. The market did bounce from the area, but now it created a higher low instead of a lower low. What does this mean? It means it's a weaker bounce. The break is likely going to happen. So you do not want to sell the market when previously the market had a weaker bounce, right? That is what creates support and resistance. Basically, the supply and demand from the buyers or the sellers, right? And then as we go to the charts now, let's take a look at this support here. Now, the market created this support, it went up and made a higher high, and then it came back down. It came back down to the zone. So as the market is here, what are you going to do? You're going to take a look at this zone here and then analyze this zone. It made a higher high. That means there is a buy opportunity. Now look at what the market did. The market went all the way up. And what happened? It created another higher high. So that means every time buyers come into the market, they push the market and make higher highs, right? Now, let's continue. The market came back again. Now, as the market comes back to the zone, you are going to look at the previous reaction and see what happened. Market made a higher high. You want to buy this. Now, as the market goes up, it needs to break this higher high now. It needs to break the higher high. So market went up. It failed to make a higher high. It dropped. So what is this? This is a lower high, right? Cool. Now let's take it forward. Now the market comes back to the zone. This is where the market is now. You're going to take a look at the previous reaction. So it's always the previous reaction. Now, previously, what happened? The market did go up, but it failed to make a higher high. So here we are seeing a steady decline in price. So at this time, you want to be cautious now with your buys, because now every time the market makes lower highs after the bounce from the support, it is likely going to break and go down. And this is exactly what happened, right? This is not because of the head and shoulder. It has nothing to do with the head and shoulder, just understanding what happens with a support or resistance. So the reason the market broke to the downside here is because previously the push to the upside, structurally, it was not significant. It made a lower high, right? That's why the market broke. So that's how you determine when will the market break or bounce. Let's go to the next example. Here's the next example, right? So look at what happened here. The market created this resistance. How do we know it's a resistance? Because it made a lower low, right? So the market was going up, making higher highs and higher lows, and then pushed, made a lower low. That's a resistance. Now look at what happened when the market went to it. So as the market is here, because of what happened previously, this is likely to happen. Most of the time, this is going to happen because of what happened previously. And now take a look at this one. So the reason why the market went down here is because of this. Market made lower lows, right? But now, as the market pushed to the upside, it went down again, but failed to make a lower low, right here. So price pushed to the upside, went down, but failed to make a lower low. So here we are seeing what? Market making higher lows. So every time it bounces, it makes a higher low. It bounces, makes a higher low. This is a sign that a break is coming. So this is how we determine whether the market will break or bounce, right? So effectively, ladies and gentlemen, you do not have to go all the way back and draw your zones. No, open your chart, look at the most significant zones that you can find. How do you know the market has created a significant zone? Is when the reaction is either aggressive or weak. So as it is right now, this is a very strong area in the market. And this one here. So this one is because of what happened here and here. This one is because of what happened here, here, and here. It's very important. So when the market comes back down here, we will see what will happen. But as it is right now, this should give a buy position. And we will then see if the market will create a higher high or will create a lower high. If the market creates a lower high and then goes back down, then there's a higher chance that this will end up breaking to the downside. Right. So, ladies and gentlemen, this is effectively how you break down and how you identify, interpret support and resistance. I'll see you guys in the next video. Thank you.